I think it's really hard to do that. I think it's really difficult for most traders to simply start out with a strategy, oh, wow, it makes money, and then stick with it. I think in most cases, there's a real temptation to jump ship or at least dabble in other things.
Two traders, Darren and Walter, pull back the curtain on profitable trading systems, consistent money management, and profitable psychological triggers. Welcome to the Two Traders Podcast.
G'day, Darren. It's Walter here, and you are here at the Two Traders Podcast. How are you doing, Darren?
Very good, Walter. Nice to speak to you again.
Excellent. Great to have you here. So our question today is, do most successful traders employ the same strategy they started making money with? In other words, once you start making money, do you tend to stick with your original strategy? Why or why not?
It's a yes and no again, isn't it? I think. I do.
yeah, exactly.
I do know some very successful traders who've done the same thing for years and years and years and never changed it. But I think most do change, and I think if we're talking only about successful traders, I'm guessing that they change because either the particular market condition that they have been trying to exploit has changed, or that they have learned as they've gone along. But I think unsuccessful traders probably change their strategy too much based on what's just happened.
Yeah. So it's interesting because I think in our last episode we were talking a bit about, or you were in particular, you were talking a bit about when something's proven, you'll build your strategy on that. So you were talking in the last episode about when the markets, you know that the markets trend and the markets are probably going to trend in the future, and so I want to build something around that proven concept, and that's going to be my system. Well, I think that most successful traders do change their, quote, profitable strategy, but it might be kind of still built on the core concepts that they began with. And I agree. I think that most traders, if you're a trader and you're always changing your system, it probably means you're either risking too much and you're getting into these normal drawdowns that are freaking you out and making you believe that the system's broken or that the markets have changed, when really it's just that you can't withstand that drawdown because you're risking too much, or you're not really trading something that you truly believe and you're trying to copycat someone else. And that's probably another reason why you would keep cycling through systems, because you haven't really found one that fits with your core beliefs about the markets. So I think it is kind of a yes and no. I do think that most successful traders do tweak their strategies, but it's often the case that it's really kind of still built on the same idea. Like I've seen, for example, Jorge in the forum, he will do things like trade. He likes to trade trends, and he's been trading this system for years and years on the 4-hour charts. He started trading on the lower time frame charts, and it was slightly tweaked, but it was basically the same idea of taking trades in the direction of a trend and waiting for consolidation and then waiting for it to continue on in the direction of the trend. So I think that's the kind of thing that you most often see. It is unusual to see someone trade the same system over and over and years and years and years, but it's not so unusual that they might change this, just tweak it a bit and keep the same core concept.
Yeah, and it's not necessarily always a negative to change elements of what you're doing, and I think that's just a human trait anyway, isn't it? I mean, it's if you've been trading for 3 years on the daily time frame and you're doing well and you're consistently making money, then what's the problem with having a look at something on a lower time frame as well? And like you say, if the core idea and the same, you're trying to exploit the same opportunity from the market, but just kind of changing what you do a little bit, that is fine. That's not a negative. And I think you can quickly spot when you're making negative changes, because it will be made as a result of performance. Okay, so like you'll have a bad week and then you change something, or it could even be from having a really, really good week where you make massive wins and then you perhaps change your entry rules or something. where, you know, and what's happening is you're not looking at the bigger picture there, that what's actually happened that week is you've just either had particularly favourable or unfavourable market conditions. and you've made a gut change to your strategy. I think those are the negative ways to change your strategy.
Yeah, absolutely. I think also that sometimes what traders tend to do is they'll be in a situation where, let's say you're trading a trend trading strategy and the market just doesn't trend for like 2 months, and they start to question, well, maybe the markets aren't trending anymore. Maybe because of whatever Donald Trump is saying, the markets are just going to kind of, not trend anymore. Or maybe because, of what people think about Brexit or whatever, they start coming up with ideas, and it's quite easy to convince themselves that really what's going on here is it's a total shift, and because of that shift you need to react in a different way. So but the thing is, sometimes those things do happen. Like, for example, volatility. The world markets are much more volatile today than they were in, say, 1986, right? There is more volatility, there's no doubt. But I think it feels like there's always kind of a boogeyman in the markets, and people kind of rely on, they use the boogeyman as the reason why things have changed. And I don't know. I mean, I feel like if you go back and read the Market Wizards books, they were talking about how automated trading was going to ruin the markets, and they're still talking about that today. They're talking about how, we had this crash because of all the algos kicked in and at the same time and whatever. And well, we had crashes like that before there was even such a thing as algorithmic trading, So I don't really, it's weird to me. Like, I think that there's always going to be a reason why. Like, humans, we have no problem making up reasons why. I just think that the core things that I believe in trading are this. If you've got a positive expectancy system and it fits what you believe, then you should do that, and you should focus on the execution of it. And that's really it. It comes down to finding out what you believe, creating a system that has a positive expectancy around your beliefs, and then focusing on the execution and not the results. And if you can do those 3 things, I think you're going to be okay. And I know it sounds simplistic and blah, 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 and people are probably thinking, I don't know. But really, to me, that's the core of trading. It's really those 3 things.
How do we go about building confidence in our beliefs? I think this is, a problem a lot of traders have is, say your belief is that trends are going to occur, and if I cut my losers short and let my winners run, then I'm going to make profit. How do we prove that belief is the one that we should go with? How do we justify it? How do we validate that belief?
Right. So what I recommend that you do is you get a chart. And I could even like post a video in the show notes for people. But basically, the way that I look at it is, what do you believe is obvious? So what do you see when you look at a chart? So I'll give you an example. So I look at a chart, and the market's gone up, 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 shallow little pullbacks. It keeps going up. Some traders are going to look at that chart and they're going to say, wow, that's a great trend. I would love to ride that trend. Other traders are going to look at that same exact chart, and this is the great thing about markets. They're going to look at that same chart and they're going to think, oh boy, that's ready for a crash. That's definitely going to come down. And in fact, most traders are going to say that. But the point is, if you look at all these different types of charts and you just say, okay, what is my gut belief here? That I should be doing this, or that, or whatever, whenever I see these different types of markets. So obviously you've got trending markets, you've got consolidating markets, you've got really kind of wild swinging markets, and you've got really kind of low volatility swinging markets. You've got really tight markets that are really, really tight and constricted, not really going anywhere. So all of these types of markets, when you see that chart, what do you think? What's your gut, like what's your instinct? And that kind of tells you where you should start from. So the trader that sees the chart that keeps going up, up, up and thinks, wow, I want to get in on that trend, they should build a system around trend following. And the trader who sees that chart going up, up, up and can't help but think, wow, I really would love to sell that, they need to figure out some sort of swing trading strategy or some end of trend, trend collapse strategy or whatever. That's what they need to trade. They need to trade that. And so, but I think what your question is, Darren, is a little bit different from that, because you're kind of hinting at the confidence issue, which is, I might believe that when I see an upward trending that I should sell it and find that turning point. But what happens if I keep doing that and I keep losing money, right? Is that kind of part of your question?
Yeah. I think basically most traders get to that stage, and then, okay, so they build a system around that, and then they start trading it. But in the back of your mind, there's always this, is this really right? I mean, I know I did a back test last year on GU and the figures are really good and the drawdowns are low, but am I really right? I mean, have I just found a little blip here? So, do we have to find it on 3 pairs, or do we have to find it on 5 years of data? How do we know for sure that, the belief that we hold and the tests that we've got are right? How can we do that? Or can you do it?
Yeah, I don't think you can. I think you never really can. It's sort of like building a case, beyond a shadow, reasonable doubt or whatever. You can keep building your case, and I prefer to trade ideas that don't have a lot of rules so that they will apply to multiple markets. I think that's the more robust way to trade, rather than doing the thing where, it only works on the euro and it only works at 6 p.m. New York time and it's only on the 15-minute charts. Don't go to the 1 hour. As soon as you go to the 1 hour charts, it breaks down. Those kinds of things, to me, those are like blips that kind of get erased, whereas your really simple ideas that you can zoom in and out on any time frame, on any market, those to me are more likely to maintain. That relationship is likely to keep going into the future, I believe. That's my core belief. But yeah, so I mean, I don't think you ever really know, obviously, and we're always going to question it in the midst of a drawdown. That's part of being a trader. It's really more like, I know I said this a few minutes ago, but it's about focusing on what's going to work, what's going to make you money, and what's going to make you a successful trader, which is not trying to modify your system when you're in a drawdown. It's to focus on the execution. If you can focus on, am I executing? Did I execute that last trade correctly? Win or lose? What did I do? Did I make this, did I do what I should have done? If I were a robot, would I have done what I did? Those sorts of things. If you can just make it all about execution and not worry about outcome, that's when things can fall into place for you. And you'll dig yourself out of those drawdowns. That can definitely happen. It's just, the problem is when we think that we assign too much meaning. As people, we see things and we always say, oh, well, that's why that happens, or that's why he always does that, and her mother was that way too, that's why she's like that. We talk about reasons why for everything, and it's no different in trading. And the fact may be you're just in a drawdown, and yeah, your confidence might be shaken when you're in a drawdown, but really, it's not really you. It's not anything you're doing. It's just the market's not really going to give this system a lot of profits right now.
Yeah. Do you think one of the problems is we try, or we want our particular strategy to be the best, or at least, let's say we want to be a trend trader. Do you think we need to have kind of some proof that trend trading is the best way to trade, and then that causes us difficulty when we see like different approaches performing well, particularly when you're performing badly? Do you think that's a problem that we have as well?
Well,
I do.
Yeah, well, I had a friend, and her parents both were fans of different rugby teams, and they were like rivals. And so whenever the father's team was doing really well, he would kind of rub it in the mother's face. And then whenever the mother's team was doing really well, she would, and it was kind of like, and there would be certain seasons where one of the teams would just be completely in the toilet. They had no hope of winning the championship. And so, you know what she would say? Like I remember one year in particular where the mother's team, and she would just kind of like close her ears to it and like walk away. You know what I mean? Like didn't want to see it. And I think it's the same thing. Like we want to be on the winning team. And so we're going to go out and seek all the information that confirms that, yeah, trend followers are the best, or scalpers, they're the best, or swing traders are the ones, price action traders those are the best traders ever, blah, blah, blah. So I think that's human nature. But I don't think that really matters. I really don't think it matters which team is your team. I really don't think so. I think when you first start trading, because you're asking the wrong questions, like you say things like, well, where, because you're kind of looking for that holy grail. So that might be something that you're focusing on. Well, these guys seem to make money, or he's got a pretty good track record, or he's been doing this for 25 years or whatever. So, you might be doing that, and it might be more important to you then when you're kind of defining yourself as a trader. But later on, you just realize, like, it's like religion, they all lead to the same, they're all going up the same mountain. It's just slightly different path. So I think it's overblown. I think that idea that your team is the best team is not that critical. I mean, what do you think?
Yeah, I agree, and I think it can be the downfall of a lot of traders, and I think a lot of it stems from not clearly defining what we're trying to get out of trading, and then building expectations around that. And I think, deep down, a lot of us would like to just make a decent income from trading, but as you kind of get into it, you find yourself trying to be the best, and have the best system and have the best results and being better than anyone else out there, and that can come at the cost of actually achieving what your real aim is. And I think an easy way of dealing with that is clearly defining what you want to get out of trading, and perhaps building like a stepped program to that. I know Van Tharp, he's got a thing where I think he says stage 1 should be just not losing money, and do that for a period of time, say 3 months or a year. And stage 2 should be making the same that you would have in a guaranteed return, like say a savings account at a bank, and kind of stepping it up. And I think we all kind of come to trading and just say, right, by June the 1st, I want to quit my job and I'm going to be sat on the beach and never have to work again. And that's just unrealistic. And then you find yourself with those expectations getting drawn by what is perceived to be the best strategy. So you could start out trend trading, do all your back testing, have good expectations, and then when you're in your 5th or 6th consecutive loser, and the other guy on the forum who's a scalper has posted 6 consecutive winners, then you kind of drawn and you lose your way, and then just start making changes based on someone else's success.
Yeah, it's true, and that's where all the little nasty fights and stuff. You'll see those things on the forums where people say things like, "See, this doesn't work. I told you," and things like that. It's just crazy. It's madness. It's madness because I get emails from traders who will show me like, well, how come this trade didn't work out? And it's like a trade that I would like. They're saying that, in other words, they're saying, look, here's your system, Walter, and this trade didn't, look at this, what happened here? Or worse, they'll send me an email and say, here's this kangaroo tail, should I take it? Or what, you know what I mean? Like things like that. And I'm like, I wouldn't even take that. That wouldn't even be a second look for me. You know what I mean? And that just shows you, like, that's what the markets are. Like, we all see it differently.
Yeah.
We all see it completely differently. And I think you're right, to your point. Like, when your confidence is lowest, when you're really kind of shaken because you're in that drawdown, you're questioning everything, that's when you really need to focus on your execution. That's when you're most likely to jump ship. And that's when you're most likely to kind of give up. And I think that's a mistake. I think in most cases that is a mistake. And I know it feels like it's broken. It feels like the world's against you and there's a big conspiracy and your broker's spiking you and all that. But really, it's just a normal kind of process and when you come out the other side of it, you'll be so much better as a trader.
We've spoke before about trying lots of different strategies when you start out, and then in the long, because I speak to a lot of traders who've been around a long time, and I quite often hear them, and I know this is true for myself as well, where you started out trading and, like you say, you looked for something you believed in, and then you went round all the houses, and eventually you end up back where you started. And I think I'm sort of interested if you agree with me on this, but I think there is actually some benefit in doing that, in literally changing your strategy all the time and trying everything out, because I find that helps you realize where the real opportunity is, and you realize that it's not in the particular moving average you use or a particular candle shape. It's a combination of lots of things together, built around your core belief of where the main opportunity lies, whether it be trend trading or range trading or whatever. Do you agree with me that it's probably a good thing that you go all around the houses and don't just start trading out and stay with the same strategy?
I think it's really hard to do that. I think it's really, really difficult for most traders to simply start out with a strategy, oh, wow, it makes money, and then stick with it. I think in most cases, there's a real temptation to jump ship or at least dabble in other things. And, I had a friend who decided that he wasn't going to get married. He was just going to date and meet different girls all around the world. And and I asked him, I asked him, what's the difference between the girls in Colorado and the girls in Bulgaria? And he's like, they're pretty much the same, It's like, it's the same thing, It's like, and that's kind of the same thing with trading, isn't it? I mean, and I know I have another friend who married his girlfriend in high school. And so that's it's interesting that both of them seem quite happy. And yet as traders, we kind of, we don't really know what's going on over there in the breakout world, because we've always been in this trend following world. Or I've never really used the ADX. How does that work? It looks kind of interesting. And there's a real temptation to do that. For me, and I do this too, freely admit, I've got like a partition that I have. And so everything in that experimental world is subject to totally different rules. In other words, those things aren't allowed to be traded in a standard account. Those things are going to end up in the Forex tester world. So there'll be a lot of testing and things like that. And so oftentimes, that means creating different tools to make it easier in Forex Tester to test it. And then you might move it at some stage over to a small account to test it out. But it's never really allowed to seep into what I consider like my core strategies. So that's how I do it. I like to partition it like that. And I think that it's fun. It's creative. It can be a creative aspect of trading if that's what you enjoy, to come up with new ideas and to test them. But I like to keep them partitioned. But your point's interesting because what you were saying, at least part of what you said, was that being able to be exposed to all different types of approaches leads you to kind of this conclusion that, it really kind of doesn't matter, and you end up back where you were anyway. And so that it's almost like a roundabout way of figuring out that, all girls around the world are essentially the same. There's not that much difference. You know what I mean? I mean, it sounds like that's what you're saying. Yeah.
You're just kind of, what you're doing is you're kind of removing that emotional changing of strategy where you've basically changed the entry system a million times and the candlestick pattern a million times, and you realize that isn't going to make any difference. So when you have a losing week, you kind of see it for what it is, rather than, it must be my entry signal, I need to improve my entry signal, and then getting drawn off down a dead end again. So you kind of, those times where you're having a drawdown, and in the past you would have changed your system, you realize that isn't the answer. So you don't make those mistakes anymore, or at least not as often.
Yeah. But what would be the difference between that and just trading for a long time? Like, let's say that you traded for a long time. You've been trading for 20 years, and really, all you're really doing is just, you're just building experience. And so you kind of know, well, I don't really want to do that. Or do you think that it must be through the different systems and the different sort of filters of seeing the market?
No, I think that if you just started out trading and you traded the same system for 5 years and you made consistent gains, then that would also nullify that desire to change when you're having a bad period, because you could base it on that long-term experience. I think you kind of build like a long-term memory then, and it's kind of ingrained in you that what you've always done has worked, so there really is no need to change it, and you would have been through those drawdowns. But I think it's kind of unrealistic to expect human beings to do that. It's certainly based on statistics. I imagine there's very few traders out there that have actually done that.
Yeah, I agree. Yeah,
maybe a few of the turtles. I think they pretty much, a lot of them went on and designed new systems, but they were built basically on the same core principles.
Yeah, and it's interesting. Like I've seen one of them, at least one of the turtles, saying something on a forum where he said, "Oh, well, most of the turtles are trading better rules now. They're not trading the turtle rules anymore. They're trading better rules than the original turtle rules. That sort of thing." Yeah,
yeah. I think their real advantage, and it's kind of what we talked about on the previous podcast, is they had a risk manager, if you like, saying, this is how you've got to trade. And I think a lot of them were not focusing on making money from the trading strategy. They were looking to get a job with people like that. They wanted to be employed. So, they knew what they needed to do was just do what they were being told, the ones that were being successful. And I think their focus was probably with the ones that were successful was what made the difference there. And I think as retail traders, we don't really have that focus. We kind of fall into trading. We hear someone talking about it at the pub, or we see something on Instagram, and we just kind of fall into it, and we find our own way without actually having someone there to say, look, this is the important things, this is what you have to do, and you've kind of got something to follow.
Yeah, exactly. And one thing about the turtles that I find fascinating, I didn't realize this until like just a couple years ago, that they were actually looking for a specific type of person who enjoyed playing like strategic games and things like that. So they were looking at, in other words, they were looking at people that would make good traders, because the turtle experiment is often used as evidence that anyone can learn how to trade. Well, like you say, they basically had risk managers. They had bosses that were watching what they were doing and would give them more money if they followed the rules. Okay, so there's one thing right there. And the other thing is that they didn't just take anybody. Like, they didn't just randomly pick people and say, okay, you're in. They screened them, and when they were really looking for people that like to play games and like to, kind of like a professional gambler or whatever, who would likes to go through the numbers and push through the game and know that in the end, his system is going to make money or whatever. That's what they were looking for. So I know, they say it's evidence that anyone trading can be taught, and I'm sure that's true. But I also think that they knew that they wanted a certain type of person, and that was something that they paid attention to when they interviewed people. So that's something I think is often forgotten.
Yeah. So it was the right personality with the right guidance. Basically, it was a combination of the two.
Yeah, exactly. Yeah, and it didn't matter their experience didn't matter. They were just trading a mechanical system, so they didn't have to know anything about economics or anything like that. So it was that I found interesting, that there was some screening going on there. And so that's something that, like, for the listeners here, if you like playing games of strategy, if you like kind of running through the numbers and things like that. Like, I like playing games like Yahtzee. So Yahtzee is like poker with dice, basically. I still don't think I necessarily understand poker, but I'm really good at Yahtzee. and my understanding is that a lot of the, like, Full House and all these things that are in Yahtzee, it's basically like poker. So I guess I probably do know how to play poker, but I'd have to have a handful of dice but so I mean, like, those sorts of things I think are interesting, and maybe a lot of the listeners listening to this, that's kind of the way that you like playing games like that, and that's a good sign. That probably means that you're in the right place.
Do you like playing games that are pure luck as well?
Not really. I feel like there's a caveat. I do have a caveat. Not really, because what happens is I feel like I'm out of control, and like, I don't have any control, whereas I feel like I have more control when you're trading like a technical chart or whatever. And I know we've talked about this before. Yeah. I mean, I there is one thing that I will do, and I know it has a negative expectancy. Okay. There's one system that I'll do if I'm like at a casino or something. I'll play roulette. That was a Freudian slip. I'll play roulette and I'll run the system where what I do is I'll bet on, like, you can bet on 3 rows of numbers. Like, you can bet on row number 3, row number 2, or row number 1. And then, so I'll bet on the row that has the most red numbers in that row. Okay. And then I'll bet on black. Right. So what ends up happening is you'll actually play for a long time because you have a lot of the roulette wheel covered, but it definitely has a negative expectancy.
Yeah.
Because of, so it will lose money, but if you just stop if you're ahead and try not to go back. but I guess that's the whole trick to gambling, isn't it? Stop while you're ahead. But yeah, I typically, like, I remember the last time my wife and I went and did something like that, we just looked at each other and we said, you know what? This is ridiculous. We like the money that we spent doing this is so silly. We should have just gone out and had a really nice dinner. So I typically don't do that. Do you like playing games of pure luck or pure chance?
Not really, but I don't mind playing roulette as well. Walk away, because I just kind of like that. The fact that, like you say, there's no positive expectancy, but you could get lucky and walk away with a nice big win. But I think if I went and played roulette, I'd have a few spins. And if I won, I'd definitely walk away. So, other than that, I like horse racing. I like betting on horses.
Really? Wow.
Yeah. If I go to a casino, they've nearly always got like a horse racing room as well, and that's where you'll find me.
That's so funny because do they have it in the pubs? In every pub, it seems, in Australia, they have like a little gambling room, and they'll have like horses on the TV and stuff like that. Do they have that over there?
No, but in the high street, there's betting shops on every high street, particularly in the lower income areas. Right. Anyway. Right. Gambling's still very popular in this country.
And how do you play roulette? Just out of curiosity, like, do you just bet on one number or something, or do you have a system or?
Yeah, I mean, no, if I was going to bet, I'd go for like 4 numbers or something. So I'd go for something with, so if my luck is in, I'm going to get a big return. But I wouldn't go for like a single number because there's, not much chance.
And when you play, do you know how they have the thing that tells you all the last, 20 numbers that have come up on there? Usually it's like a digital. Do you look at that?
No, I think that's just brilliant bit of marketing, isn't it?
Yeah, it sure is. It is exactly what it is. It's the gambler's fallacy on a big billboard. Yeah, that's interesting. Cool. Well, that's interesting. I didn't know you were a horse betting man, Darren.
I just like the idea, like you were saying, that you could perhaps believe that you've got some sort of element of control in there. Yeah. With the picking of the horse and that.
Yeah. Yeah, totally. Yeah. That's funny. Yeah, it's funny. I mean, we're funny creatures, and it certainly is no different when we're trading the markets. It's Well, okay. Well, thanks for your time, Darren. I guess we'll see you next time. Yeah.
Okay. Thanks, Walter. See you next week.
Okay. Bye.